Yeah, of course. So we usually look at the individual ones independently of each other, but often what people do is they use a commodity index to reflect what commodities are doing as an entire market in themselves. And it is a huge market. So one of the most commonly used ones is the Bloomberg Commodity Index. You've also got the S&P 500, GSCI Commodity Index. And a lot of people are estimating where commodities go from here, because I'll bring up a quick chart showing you the absolutely massive rally that we saw across just about every commodity. And you can see the lowest point on that chart there is the depths of the COVID-19 pandemic, of course, but then over the last 2 years, demand has surged. Iron ore, nickel, copper, oil prices, you look at all the charts, they're all surging. Now, we have had a pullback. That pullback is in the range of 10 to 15% across different commodity indexes, but one bank has given a pretty strong view on commodities as we continue to cover them today. Goldman Sachs has said that there could be an up to 23.4% rally in commodities in general in just this year alone. So by the end of the year, there could be a 23.5% rally. UBS also says that there could be 15 to 20% gains in the commodity space across the next 12 months. So a very bullish view. Of course, which commodities, they didn't say exactly, but of course it does provide a good outlook for the space in general.
Very good. So you've got this optimistic view on sort of high commodity prices, and then you've got these interest rates being hiked. Mr. Buy the Dip Dan, how high can it go Howie? Mr. Dan Howie, how are we all sort of... How's that sort of affected? How are these interest rate hikes going to be affecting the commodities?
Yeah, so I think when you look at the comments provided by the brokers that Louis is talking about, I guess a lot of what's pushing commodities at the moment, I guess in general, is macroeconomic events, and that's what we've seen this year across materials and energy as a whole, and that's what we're probably looking towards the end of this year. I think when we talk about the tensions between now China as well coming into the picture as well, I guess a lot of people see a lot of risk there, which is what a lot of these brokers are talking about. But I think when we talk about commodities and interest rates, obviously, historically, there's been a pretty strong inverse relationship between the two. And I guess it's pretty straightforward why. I guess in low interest rate environments, the cost of financing stockpiles is lower than when interest rates are higher. So when it's cheap to hold inventory, businesses have more reason to stock up, demand is up, push prices up as well. So I guess when inflation increases as well, which we have been seeing, more money obviously chases fewer goods, and the price of commodities also increases. So at this point in time, we have seen inflation going up, which is what's been pushing, along with macroeconomic factors, commodities higher. But interest rates, as obviously you can see on that chart that Louis pulled up, had a pretty short-term pullback on the price of commodities. But it'll be interesting to see when inflation peaks and the Fed and other central banks become more dovish and inflation is coming down and interest rates are going down, we should continue to see a pretty positive rally through commodities as well.
Very